Hello everybody and welcome to my NIO Earnings Preview. Today NIO will report after the market has closed and I'll make sure to have it covered on the channel. And before that, let's walk through my estimations for the fourth quarter of 2021. Here on the left side you actually see my estimations for the Q3 2021 and then the actuals. So these are the numbers that actually got reported by NIO, and I reported about that one as well. And as I always do that, I make my estimations here again, and I will briefly talk about these numbers. So I am calculating with 1.376 billion US dollars. So this is in millions of US dollars here, this number for vehicle sales. And that is deriving from the fact that I'm actually calculating with an average sales price of 55,000 US dollars per vehicle sold. Last quarter, this came in actually slightly lower, 54,000 US dollars. And this time we see that we have a slightly higher, only tiny bit higher ES8 share than last time, and the ES8 is the highest average sales price car in the fleet. And this average sales price depends a little bit also on other factors, like if they, for example, give some discounts and things like that. But largely, it should be similar to last quarter and maybe even a little bit higher. That's to be seen. But in that case, we would arrive at this vehicle sales number, which frankly is already quite known. This is what is out there already. And then the more questionable part is whether or not we'll arrive at other sales of around 135 million US dollars. And this is slightly lower than last time, where it came in actually much higher than my estimations. And last time it came in higher because NIO was actually selling some of their regulatory credits. And I think it's unlikely that this is going to happen again. And because I think they mentioned last time that they actually sold most of their regulatory credits, and of course they are accumulating new ones as well, but usually they are kind of trying to time also the market demand for those credits, and so possibly they don't have them this time, and which is obviously not that good because then there is less revenues. But personally, I'm hoping that they could still arrive at 135 million, because if we look at some of the other sales KPIs here, so key performance indicators, we can see that in the last couple of quarters, this number has been fluctuating around 900 US dollars on average. And this time I basically used a bottom-up approach here and said they possibly have an average of 950 US dollars. And this time at a larger fleet size, because of course the fleet size is growing from each quarter, and thereby I'm calculating basically if those fleet users on average are going to spend 950 US dollars and on things like the services, e-commerce and other revenues, this would result in 135 million US dollars on this other sales metric here. To be fair, this might be a bit optimistic because, well, that would be a huge jump also from some of the actuals earlier. Usually this has been more averaging around 80 to 90 million, and last quarter was a big jump. So I'm not sure if, even though there will be a decline of 50 million here in my calculations, they can actually arrive at that number. And if so, that would put them at 1.5 billion in revenues, more or less. Regarding the vehicle margin, I have calculated with 19%, so that is on average a little bit lower than in the past, but higher than the last quarter. And I'm kind of assuming here that they will possibly just start to recover their sales margins here for the vehicles from the several downtimes which they had in the past for retooling the factory. And so kind of making not a high assumption here, and that would get us to a total cost of sales of around 1.2 billion, and that would land us at a gross margin of slightly below 20%. So you'll see that this is actually a lower number than what we've seen in Q3, and that's once again due to the fact that possibly the other sales won't be as high, and frankly this number could actually even be lower in case my other sales estimates here come in lower as well. And so there might be a gross profit of 260 million. And then to the really interesting part here, research and development. Last time I estimated minus 150 million in R&D cost, and it came in slightly higher, 185 million. And if I'm calculating like all of the quarters and the actuals that came in for 2021, we would actually arrive at 426 million in R&D spend. And NIO previously gave a guidance that they are actually going to spend around 500 million for the year in 2021. And so actually that would only leave them with around 73 million in R&D left to spend. But I think that might be unrealistic, because if I'm looking at how much NIO currently is investing in terms of the ET7 launch, the ET5, the ES7, so 3 models for which they need to do winter testing, summer testing, the engineering, the tooling of the factory, various types of improvements on the NT 2.0 vehicle platform. I'm not sure if they can actually stick to this R&D budget there. And while this is cost, and so that's not nice, on the other hand, you would want a startup to invest in such kind of development, because ultimately this is where future profits will come from. And so I'm making here kind of a almost worst case estimate here, minus 190 million, and that's also because I see NIO doing lots of hiring also, and I think also like some of the chip researchers and engineers and developers which they're hiring, I think parts of that will go into the research and development expenses, and I'm just seeing that NIO is hiring like crazy. And so this is kind of a, let's say, a red flag or something to watch closely. Will they stay within the 500 million budget? I doubt it actually. And how high will this number be actually? Yeah. Then the next one is selling and general administrative expenses. And so this also has operational cost, this has marketing cost. And last time I was assuming minus 250 million. It came in higher at 283 million. And this time I'm just putting a worse figure out there again, minus 300 million. And why am I doing this? I'm doing this because I'm looking at the battery swap station build out. Where do I have it? Here, the battery swap stations. So you'll see that in the end of the last quarter reported, the Q3, they had 517 battery swap station last time, and they built roughly the same than the quarter before. However, in the last quarter of 2021, they actually built 260, arriving at 777 battery swap stations. So that's a huge increase again from actually even the higher baseline there. And so, I kind of need to reflect that in an assumption that is even higher for sales and general expenses there. And actually, we all even don't know, like from the Q3 quarter that was reported, if that already includes all of the costs spent for the battery swap stations and other marketing services, because frankly, there might be even a time lag with the payment terms and things like that. So this will be another very crucial number to watch, like how much cost will actually be coming from this huge scaling of the battery swap stations that we've seen. They're now coming down a little bit because they have reached some targets, but Q4 might be really a quarter where they have accumulated lots of these expenses. And so I'm calculating here with 490 in total operating expenses, and that would land us at a loss of from operations of minus 228 million. And in total, I'm calculating with a net loss of minus 230 million. So if you're looking at the estimations by the analysts here, you can see that they are looking at 1.53 billion in revenues. So my estimations here would be slightly lower, would be a small miss on the revenues for NIO. And for the earnings per share, last quarter it was at minus 0.06. And this time the analyst estimates are around minus 0.14. So basically also assuming here that the losses will basically double. And if you look at my calculations here, so last time minus 130 million and this time minus 230 million, it's roughly arriving at this. I haven't calculated the earnings per share because I don't know too much about the dilution and other effects, so it's usually getting a little bit blurry there. But overall, I would also say that this is kind of similar to what the analysts out there are estimating for NIO. And so these might not be the prettiest of earnings for NIO this time. And I would actually say that even those numbers are not even too important this time, because I think the market is rather waiting for the guidance and also the forward-looking statements by NIO. I think there needs to be a reassurance around the guidance for the quarters, but also very long-term, like what will be the growth path there. And since there was such a long time since the last earnings, and we really didn't have a good guidance by the management recently, right? So this needs kind of needs a refresh now, and I think this is what the market is eagerly awaiting. And in terms of how the market is going to react to it, frankly, I don't know. In the last time, it always has been selling off, and I remember even on when I was very excited about earnings and popped a bottle of champagne, it still sold off. And actually also the last time I had a streak and made lots of NIO videos, NIO afterwards tanked 15% or 50%. So yeah, take this also always with a grain of salt. There might be bad omens out there, but anyways, that doesn't change my views for now on the long-term prospects of this company and the stock. And as you know me from watching my videos, I'm not really the guy who's trading around such events. And so, yeah, as long as the company on the fundamentals is moving into the right direction, I'm going to hold onto my position, and also think that earnings and other dips might be interesting for some of the investors to either average up or average down. But that's so much from my side. See you later with the review of the actual numbers. Thank you guys for watching, and fingers crossed we get some good ones.